The FTX saga in 1 minute. It all starts with Sam Bankman-Fried, who started a crypto trading firm called Alameda Research in 2017, and in 2019 he started FTX, a centralized crypto exchange, and SBF raised billions at the click of his fingers and all was going well. People did ask though, is it a conflict of interest that these two companies are owned by one guy? But most people brushed it off until November 2nd, when CoinDesk published a leaked Alameda Research balance sheet where much of it showed that the company held FTT tokens issued by FTX. And on November 6th, Alameda Research CEO Ellison tweeted that the balance sheet was incomplete and didn't show some of the hedging assets, basically saying that the company is doing well. Of course, the market did not buy any of that BS. And just to egg on the problem, CZ of Binance said on Twitter that he would load off hundreds of millions of dollars in FTT. And so traders on FTX started to withdraw their money from the exchange. Then FTX started having backlogs on withdrawals, so even more people jumped on their withdrawals. On November 6th, there were $4 billion worth of withdrawals, and by November 7th, this number grew to $6 billion. And November 8th, FTT coins started to crash and crash hard. Binance then enters the chat and said, hey, let me buy you out. But on November 9th, only 24 hours later, Binance backed out. And on November 11th, Wall Street Journal reported that FTX used customer money to fund risky bets. And so many traders, both retail and institutionals, are unable to get their money back from FTX. And so on the same day, FTX Alameda Research filed for bankruptcy and SBF quit his job. More than $152 billion in market cap has now been wiped off top cryptocurrencies, and SBF is now on a holiday living the dream. And so here is